Let's look at Amazon for a second here. In this row here, we have total net sales in billions of dollars. We have their diluted EPS and each of the periods that are noted there. In this row here, we have uh, their earnings per $1 billion in sales. All you do there is you take their diluted EPS and you divide it by their $1 billion in sales. So for every $1 billion in sales, Amazon adds 3.5 cents in EPS. For the year, they made, that was in the fourth quarter. For the year, they made 3.6 cents per $1 billion in sales. Now, Amazon made $4.91 for the year in 2016. How much do they have to make to get an even value of PE of 15? Now, we're going to use closing price of a couple weeks ago on the 17th of February of 845.07. Let's look at what they're at right now. They're at 849.65, so they got a higher price right now. Actually, they're near all-time highs, so you can see in this 10-year chart. Now, how much do they have to make in order to be an even value PE of 15, which I consider even value? Now, all you have to do is divide that number by 15, the 840, the current price, whatever the current price is that you want to use, by 15. That will give you an earnings per share that they have to make in order to have an even value at whatever value you want to use. I use 15. So at 15, they have to make an even value. To have an even value PE at 15, they have to make 56.34. So at their current rate per $1 billion in sales, they'll have to make $1.56 trillion in sales in order to have an even value PE of 15 and make these earnings. So they only have to increase sales by $1.424 trillion. Is that realistic? Can Amazon increase sales like that? Let's look at their past earnings or sales increased history. We're going to use 1996 as a base. They IPO'd in 97. So there's your base before their IPO. And you can see in the first 5 years, or first 4 years, they did very well at increasing those sales levels, but they had lots of IPO money to help increase those sales. You can see in the dot-com bubble burst in 2001, their sales suffered, but they rebounded, and they averaged 34% in the next 5 years. The next 5 years, they did better. They averaged 43% in those 5 years, and the last 5 years have averaged about 24%, with the highs being about 27.8. In fact, last year's sales increase was the highest they've seen in the last 5 years. Let's go with last year's sales increase, the highest in the last 5 years, to see how long it would take them to reach $1.5 trillion increase, or the $1.5 trillion in sales they need in order to have that even valued PE at their current per $1 billion earnings at 3.6 cents. Alright, so each year here in this table shows an increase of 27% and then adds it on to the next year. You can see they have to increase sales next year by $36.83 billion to increase 27%, and each year it shows how much they have to increase those sales each year to maintain that 27% increase. You can see by the 11th year to maintain that 27% increase, they'll have to increase sales by almost as much as Walmart makes in a year. Walmart, by the way, is the highest sales total in the S&P 500 with $472 billion in the last year. In fact, I believe Walmart is the highest sales total in the world with that $472 billion. So can Amazon increase their earnings or their sales in 1 year what Walmart makes a year now? Probably not. As you can see, as these totals go higher, it's going to be more and more difficult for them to maintain that 27% rate. Here in the green, it seems possible they could possibly maintain that 27% rate. That's a big number, but you know, they might be able to maintain it for a couple years. As we hit here, it's going to be difficult. We'll probably see their per share earnings or their sales growth rate fall to the teens, the high teens by this time. As we go further, it's going to become almost impossible. I mean, by the 7th year, they have to increase by more than they've been able to do in the first 20 years in 1 year. It's not very likely they're going to be able to do that. We're probably going to look at growth rates in the low teens to high single digits by this point, if they can maintain at that point. It'll be very difficult for them to maintain even a high single digit growth rate at this point. Most companies that are making that kind of those kind of sales are in the low to mid single digits. So, you know, if we're optimistic and we say Amazon can keep up the high single digits here, it's probably not likely, but maybe they can. By this point, there's almost no way possible for them to continue a 27% growth rate. There's just the numbers are getting too high. By this point on, their growth rate is going to be much lower than 27%. But let's say they can do it. So it's going to take 11 years for them to get there. You know, between the 10th and 11th year, halfway through the 10th year, they'll reach that level. So Amazon is at least 11 years forward on earnings at their current growth rates and current earnings per share. But they have headwinds. Amazon loves to hand out shares. They handed out 6.3 million shares in the last quarter or last year, and 6.4 million shares in the year before. Now, the shares they handed out last year at 845.07 were worth almost $5.5 billion and almost $15 million per day they handed out in shares. Now, those share total additions are going to cost earnings 7 cents a share next year. In other words, they're going to have to increase their earnings 7 cents next year just to maintain that 491 because of those shares that they handed out during the year. So they'll have to increase their earnings before they're divided by the share total by 7 cents just to maintain that. Now, each year that's going to add to the share total that they have to reach that even value. So they're going to start out at 1.56 trillion. They're going to add 21 billion are going to have to add 21 billion in sales just to maintain, and so on and so forth. So by the time they reach the 11th year, they need 1.8 billion dollars or trillion dollars in sales. It's not realistic. Amazon did something in the last year that's helped out their earnings per billion. For the fiscal year last year, they had a 1.1 cent per billion dollars in sales, and this year is 3.6 cents. But in the best they've seen ever, this is the best earnings quarter they've ever seen, and the best per share earnings or per billion earnings they've seen. We're still looking at more than Walmart in order to reach an even value P of 15, and a growth rate that doesn't seem likely they'll reach it within 5 years. Now, Amazon, it doesn't seem likely that they'll be able to regain that level. There's a couple reasons here. One, they did their automation, and they wanted to show a good number there, but it looks like they pulled numbers out from the next quarter to do that, and companies do that. Like it or not, companies do that. They pulled earnings out of this quarter to make that quarter look better because they wanted to show a big earnings there. Another thing that kind of makes that earnings look fishy is the fourth quarter. All except for maybe 5 years in their history, the fourth quarter has been their best earnings quarter. And here we see the second quarter the best earnings quarter. Actually, the second quarter has never been in their history their best earnings quarter. It's either been the first quarter or the fourth quarter. So that number looks fishy. I'm not saying they did something wrong. But if you look at the numbers, it kind of looks fishy to me. That per billion and per billion there, and it just doesn't look right. And companies do that. It's all accounting. It's how you account for your money. If they want a good earnings quarter, they can move costs someplace else just by not paying them until the next quarter, or So the other thing that's kind of interesting here, if you take Amazon's earnings from their beginning in 97, you take their earnings and you add them all together, unadjusted earnings, you add them all together, and in the third quarter they made 153. The third quarter they made 153. In other words, in the second quarter, their total history, they finally started making more money in the second quarter of 2016. In the third quarter they made 153. The fourth quarter they doubled their earnings, their total earnings in their history. It's just kind of interesting. Now, if you adjust them for the stock splits, their total earnings in their history by the fourth quarter is $8.27. So that's just interesting. Amazon lost money forever, and made money for a little while, and went back to losing money, and then made money for a little while, and went back to losing money. So can Amazon keep making money? Who knows? They've got headwinds. They've got headwinds by handing out stocks, and they've got headwinds that everybody's gunning for them. Their internet sales, their cloud sales. Microsoft is making big advances on their cloud sales. Target, Walmart, Best Buy, everybody in the world has their own internet sales website now, and that shows up in the fourth quarter earnings here too. It wasn't the best earnings of the year. So can Amazon continue to increase at this rate? That 3.6 cents per billion, maybe they can't even maintain that 3.6 cents per billion because they're going to have to cut costs or cut the cost of their products in order to continue to increase sales. So, if they have to do that, they might not be able to maintain that 3.6 cents per billion. So there's a lot of questions out there too. But if they can maintain their sales increases, they're over 10 years forward. If they do their best sales totals ever, they're over 5 years forward. And it's hard to say that Amazon is a fair price stock right now, and it's hard to believe without stretching very far that they can ever become a even value stock. Now their even value right now is 73.65. Well, based on their earnings, yes, their even value is 73.65 based on their trailing 12 months earnings, and that's at a PE of 15. You just multiply that earnings by 15 and you're going to get 73.65. Now, if there's a stock market downturn, Amazon is not protected at all. They don't pay a dividend, which makes them a very sought after short. A lot of people will short Amazon in a market downturn because they don't pay a dividend. There's no cost to short them. You can short Amazon for nothing because you don't have to pay the dividend to whoever you borrowed the shares from. They have a huge PE, this trailing 12-month PE based on that 845. So they don't have reasonable expectations of making earnings within 5 years to make them an even value stock. So in a market downturn, Amazon could fall very far. In fact, they'll probably fall under the even value. Stocks are like Amazon in past crashes have fallen to PEs of 3 or even lower. So to say Amazon can maintain that stock price in a downturn, don't count on it. It's probably not going to happen. So if you got Amazon stock, good luck to you. I think you're probably in an area where you should probably be selling, but I don't own it, and I wouldn't buy it here. And I stay away from any mutual fund that is heavily invested in Amazon. You can see some of them have 10% of their fund values in Amazon, and very easily over 10 or over 9% of that could evaporate very quickly. In a market downturn, Amazon will not do well. That's just historically on stocks with similar profiles to Amazon. They don't do well. They crash very badly. In fact, Amazon can see their stock price go under $10 pretty easy. That's what I'm seeing. Have a great day trading. This is Ronzi.